Namaste and welcome back, traders. Yesterday's session in the Indian equity market saw a significant sell-off, reversing some of the recent gains. While certain sectors showed resilience and global markets presented a mixed picture influenced by various cues, domestic sentiments, however, turned distinctly bearish. Let's dissect what drove this market action. The Indian benchmark indices faced considerable downward pressure yesterday, with investors seemingly booking profits or reacting to specific domestic or global triggers. The losses were quite substantial, indicating a clear risk-off mood for significant portion of the trading day. The Nifty 50 index closed at 24,578 levels, registering a substantial drop of 346 points, translating to a significant loss of 1.39%. Similarly, the Sensex ended the day at 81,148 levels, plunging by a hefty 1,281 points, making a notable decline of 1.55%. These sharp falls highlight a strong bearish sentiment prevailing in the Indian markets just before a previous day when we saw a significant roughly around 4% of upward movement. So while the main indices took a beating, the sectoral landscape presented a more nuanced picture, with some sectors showing surprising strength amid the widespread negativity. Media and pharma sectors shown resilience. Interestingly, the media sector stood out with a significant gain of 1.66%, perhaps being perceived as less directly impacted by broader market concerns. The pharma sector also displayed significant strength, jumping by 1.22%. Pharmas often seem to be as a defensive play during the market downturns, and similar thing had happened yesterday. The IT sector, on the other hand, which had led the rally the previous day and was a recent strong performer, faced significant profit booking yesterday, plunging by a substantial 2.42%. So this could be due to concerns about global economic outlook impacting the overall IT spending. FMCG and auto sectors as well succumbed to the selling pressure. The FMCG sector experienced a notable decline of 1.34%, suggesting even defensive sectors weren't entirely immune to the selling pressure. The auto sector also witnessed a fall of roughly around 1%, potentially due to concerns about the demand or the industry specific headwinds. Now let's turn our attention to the global markets, which presented a mixed bag of performance influenced by various economic data and regional factors. Across Asia, we saw a split in performance. Japan's Nikkei displayed strong positive momentum, jumping by 1.43%. China's Shanghai Composite also closed in positive territory, but with mild gains of just 0.17%. However, Hong Kong's Hang Seng faced significant selling pressure, sliding by a substantial 1.87%. So this divergence highlights the varying regional sentiments based on the specific regions cues. European markets generally closed in positive territory, although the gains were relatively modest. Germany's DAX was up by 0.23%, France's CAC gained 0.30%, while the UK's FTSE remained largely flat, closing with just minimal change. Overnight in the US, the markets also showed a mixed performance. The Dow Jones closed lower, down by 0.64%. In contrast, the S&P 500 managed to close in positive territory, up by 0.72%, and the Nasdaq Composite saw a significant gain of 1.81%. So this divergence suggests sector-specific movements, with tech stocks showing strength, while the traditional industrial stocks faced pressure. And yesterday there was also news about the jobs data from the US and overall the employment has improved compared to the previous months or the quarters. So that also remained as a positive news for the US market to slide up. So now let's deep dive onto the charts as well as the open interest to understand what it suggests for today's market. So as you could see, we are in the daily Nifty 50 chart. So markets in fact exactly started facing the selling pressure from the previous day's high. So we inched to open slightly, above the previous day, and the overall high, crossed even beyond the yesterday's close. So that was positive. However, immediately there was a selling pressure that was seen, and this selling pressure continued throughout the day, and we closed, towards almost like 70% of the retracement of the yesterday's high. So this suggests that at the higher levels there remains a selling pressure on Nifty index, and if we see from the perspective of market breadth, roughly around 40 stocks or 38 stocks were down, and just 12 stocks were positive. So overall the market breadth was not positive, and the selling pressure continued across the sectors which have had heavily performed just the previous day in this big rally. So there was a positive news about the India Pak ceasefire, but then the market players weren't so positive about the strength that the Nifty had built. That is when the selling pressure continued throughout the day, and now we are actually in a kind of range bound scenario that got created on Nifty index. So the immediate support for us is surely going to be this level, around 24,400, from where we immediately saw the significant rally that had come in. So since the market now closed at 24,578 levels, so since there are 2 days to expiry for Nifty, so we have to closely track how the movement is expected to happen. If we continue to see the sell off today again, and if the markets, despite opening maybe a gap up today, continues to slide below the yesterday's close, then this should be considered as a negativity in the markets, and our major position should be from the perspective of sell off and not on the buying front. So we should be only turning to buys after Nifty again starts moving beyond 24,800 odd levels, because this is the zone where we would be seeing significant buying interest that could come up for a further rally towards 25,200 odd levels. So till then, the till at least the market Nifty expiry on 15th, we are expected to trade in the range bound kind of scenario. So from the 24,400 odd levels until 24,800 odd levels, these 400 points is what is expected to be the trading range for Nifty for the next two trading sessions. So today's close is definitely going to remain crucial, whether tomorrow the market is expected to turn positive or continue to slide further. So on the support zone, the strict stop loss should be kept at 24,400. If these levels are taken down, then we will slide towards 24,000 odd levels, from where we saw a significant up move that had come up. Now let's see from the perspective of open interest. So on the open interest, it is very evident on the put writing side. So as you could see, from 25,000 levels until 24,500, we saw lot of unwinding that had happened on the put side. So at each 100 levels, there was significant unwinding that had happened. So this evidently suggests that the put writers were not confident at all at the higher levels, and that is when they were unwilling to hold the positions. That is when the sell-off had been so sharp yesterday. So compared to the previous days 3.82% rally, it was just one third shave off of the returns. but then the overall breadth and the selling pressure was so significant that in fact today also this could not turn into positivity, though the gift nifty suggests slightly up move compared to the previous days close. So overall on the call side we see significant open interest positions that got built up at all the higher levels, 25,500, 25,000, and until 24,500 it is like neck to neck. Both the writers on call side as well as on the put side have been on a tough tug of war. So now today's trading session would be the pure decider as to where the market would be headed towards and close for the 15th May expiry. So overall, there is a good selling pressure that is built from the call writers at the higher levels. So the immediate trading range for Nifty is expected to be 25,000 levels until 24,500. So once 24,500 gets taken down, we will approach towards 24,000 odd levels. So for Nifty, the range bound scenario is expected to be there, and consolidation until either 24,000 on the lower side gets taken out and 25,000 on the higher side gets taken out. So this 1,000 point range is where we are going to overall consolidate. So on the PCR, it is zero point 0.7, which is neutral to mild bullish, and at the money it is at 0.62, majorly because of this position, since there was only built up from the call writing side. That is when we do not see the PCR being high. Now let's move on to Sensex. So even Sensex had a similar kind of trade being seen, where we see a significant bearish candle that had got created. And for Sensex, since this had been the zone of resistance from a long time, right, from the 2024 December. So now since we were expected to cross this, but immediately at the higher levels we saw a significant selling pressure coming in, and roughly around 70% of the previous day's performance was shaved off in the Sensex. But since we opened gap up, that is when the crucial zone for us now is going to be 80,800 odd levels. If we significantly start trading below those levels, then we will open towards the range of 79,000 till 82,000 odd levels, from where we significantly saw the selling pressure coming in. So this is the range that we are expected to trade for the next week for the Sensex. So since yesterday was the expiry for Sensex, could be that is one of the reason for that intense selling pressure that had come up, because market operators usually want to adjust to a place where they would be getting the highest premiums and profits. So that could be one of the reason for these sharp movements that we had seen. However, the entire other indices had also shown the similar trajectory. So there was a broader sell-off, and the put writers were not at all confident at the higher levels. That is when significant selling pressure was seen. So overall, for us, the resistance would definitely remain as 82,000 on the higher side, and on the lower side, the immediate support would be at 80,500 that would emerge for Sensex. If we start sliding further below that, then we will open the gates towards 79,000, from where we saw a significant up move in the Sensex, or that was the lowest when before the India-Pak ceasefire. So that zone will remain crucial as support until a very long time, is what we believe. But yes, if this kind of selling pressure continues, then hardly it is a week's time for us to approach towards these levels. So overall on Sensex, the close monitor should be there at 80,500 odd levels, and then if that gets taken out, we will open towards 79,000 odd levels. So 3,000 point is what is going to be the trading range for Sensex for the coming week. Now moving on to the open interest. So it is quite evident that there is a support emerging at 81,000 odd levels from the put writers. So 50% of the open interest positions got built up for the new 20th May expiry. Though this is just the 1 day's positions, today in fact we would get the clearer picture as to how the uh, players are placed for the Sensex 20th expiry. So overall, looking at the strikes at all the higher levels, we saw a significant open interest positions that got built up. So as you could see at 81,500, 82,000, all the round figures, we saw good significant open interest positions on the call side being built. Similarly at the lower levels on 80,000, on 79,000 on the put writers, there is open interest built up. So this evidently suggests that it is in the near time going to be difficult for Sensex to approach towards 81,000 to 82,000 odd levels. So we would be trading in the range bound kind of scenario from 81,000 to 82,000 odd levels, at least for a day or 2 days time. So once we see either of the sides, the Sensex moves, then we would be seeing a selling pressure below 81,000 odd levels. Similarly, there would be buying spree that would come up if we start crossing 82,000. So for us, the crucial zones are 82,000 on the higher side, and then primarily 81,000 on the lower side. Provided if we sustain, if we fail and there is a breakdown, then we will approach towards 88,000 odd levels in no time. So this is what is the trading range that we could expect on Sensex in the coming week. So 82,000, only beyond 82,000 we should start to buy, and that could be one of the reasons why we could be able to see the strong sustenance happening only beyond 82,000 odd levels. So overall on the PCR it is 0.9, which is bullish to positive, and at the money it is 0.71, which is still okay. Now from the perspective of Bank Nifty, as well saw selling pressure immediately from the previous day's high. So all the indices succumb to lot of selling pressure at the higher levels. However, compared to Sensex and Nifty, Bank Nifty showed some resilience because there was significant positive uptick in the PSU banks. So private banks traded lower. However, PSU banks were almost positive by 1.2 to 1.5%. So that was one of the reason why certain stocks in Bank Nifty, PSU stocks typically had performed well. That is when Bank Nifty index did not trend towards the lower trajectory. So some positivity could emerge in the banking stocks, and which could sustain the Bank Nifty to not fall below 55,000 odd levels in today's trading session. So we might open bit gap up, and then that gap up should be sustaining is what we are anticipating, and approach towards 55,500 odd levels, which was the high that it had given. So there was just a 500 points downfall from the previous day on Bank Nifty. So overall Bank Nifty is positive compared to the major indices. So if anyone is looking to go long, it is the banking stocks. So once we cross 55,500 odd levels on Bank Nifty, we could approach towards 56,000, which was the first previous 52-week high, and then from there on we could move towards 56,500 to 57,000 odd levels. So there is a huge gap that it had created with the positive news on the ceasefire. Now we have to see if Bank Nifty in what range it trades. So if we take off 54,400 odd levels, then we will open for this zone on the bank nifty. But looking at the charts, that doesn't seem to be expected in the coming days. So some positivity could emerge and we could cross beyond 55,500 odd levels in the coming sessions is what we could see. Let's analyze now from open interest. So as you could see, there is more positivity on bank nifty despite the selling pressure that we had seen yesterday. So overall 55,000 still holds lot of strength despite the sell-off. So we might see the gap up opening to be expected, and we start trading above 55,000 odd levels and move towards 55,500 odd levels. So though there is some open interest additions that had happened at the higher levels, but that is not significant to the kind of positivity that we might see once bank nifty approaches to 55,000. We will significantly start seeing the open interest built up happening on the put side. Similarly at the 56,000 odd levels too. So overall bank nifty is strong compared to other indices, and this could be the one sector which could emerge as positive, and that could hold the major indices like nifty and sensex despite the other sectors show some downward or the negative sentiments. So overall, yes, it is expected to be long on bank nifty index, or be long on the banking stocks, and this could be leading the next rally for the further up move. So overall on PCR it stands at 0.8, which is quite positive. At the money is also 0.85. This is majorly because of good strength on the put writing side. Now let's move on to FINNIFTY. So FINNIFTY compared to bank nifty is slight negative, but then all the financial services stocks could also turn to positive provided if there is positive or gap up opening today and that gap up sustains. So once it sustains, there are high possibilities for it to cross 26,500 on the immediate term, and then approach towards 27,000 odd levels, which was the previous 52-week high. So there are very low to minimal probabilities for FINNIFTY to start trading below 26,000 odd levels. In case if that happens, then we will open for this zone of consolidation or a sell-off from where we significantly started to see the positive momentum coming in. So on FINNIFTY, yes, the resistance, the first resistance will be 26,500 odd levels, from where yesterday we saw the selling pressure coming in, and the first support would emerge at 26,000 odd levels, which was the previous days gap up opening, right? So that would act as a very strong support for us, because there was a lot of buying that was seen at those levels, from where we saw a significant up move that had come up. So overall, this should be the zone for FINNIFTY to trade. Either of these parallel lines gets either broken out or broken down, then that should be the stage from where we have to sell off if the breakdown happens, and go long if the breakout happens on the higher side. So overall, FINNIFTY is expected to trade in the range of 500 points between 26,000 levels to 26,500 for the coming days. Now let's see from the perspective of open interest what it suggests. So it is very clear 26,000 levels hold a strong support for FINNIFTY. On the higher levels, there is not huge resistance at 26,500 levels though. So in case if there is a strong strength that emerges, then at all these 100 points strike at 26,200 to 300 to 400, we will see good put writing that gets emerged. If that happens, then we are bound to move towards 27,000 odd levels, by the 29th expiry on FINNIFTY. So this very evidently is seen on the open interest positions. So the overall range for FINNIFTY would primarily be 26,000 till 26,500 takes out. We would trade in this range. Once it gets taken out, then we would have a 1,000 point range to approach FINNIFTY towards 27,000 odd levels. The PCR overall is 0.4, which is negative. However, at the money it is 0.86, which is quite positive. So FINNIFTY and Bank Nifty are strong and positive compared to the major indices. So this is what we could easily conclude. Now lastly, the FII and DII data. So let's see, because this is going to be interesting, since there have been a good sell-off that had seen, who are the players who participated in this sell-off, and what is the stance that they are vouching for is what we have to track and take the necessary positions. So on the index futures from the FII's end, they have taken short positions. So the previous day they were long, and then now they have taken shorts. So FIIs have been the sellers in the yesterday's trade. So on the stock futures, they firmly hold 18.21 lakh contracts, which is still positive despite roughly around a shave off of 1 lakh contracts. On the call options, they are long by 1.26 lakh contracts. However, on the put options also, they have been long with 1.71 lakh contracts. That means they are pessimistic about the the previous day's rally. That is when they have taken short positions with 43,000 odd contracts. So now FIIs on the options index option side as well as on the index futures have been the sellers. Now let's look from the perspective of proprietary traders. So on the index futures, again proprietary traders have been short. On stock futures, they mildly hold 2.59 lakh contracts, which is okay. On the call options, they are long with 25,000 odd contracts. On the put options, again they are long with 42,000 contracts. That means they are not at all positive. So net if you see, they are again short by 17,000 odd contracts, which is not significant, but there was some participation from their end in terms of the sell-off that we had seen yesterday. Now let's see what the retail players have done. So on the index futures, the retail players have been long. So both the FIIs as well as the pros have been short, whereas that has been absorbed by the retailers, and they went long on the index futures. On the stock futures, they still hold 17 lakh contracts, which is quite bullish. On call options, they are short with 1.52 lakh contracts, 5 lakh contracts, and on put options again, they are short with 2.61 lakh contracts. That means somewhere, the retail traders expect that there could be a range bound kind of scenario that could play out. That is when they have went significantly long by 1.1 lakh contracts. So today's trading session would be the decider whether market is going to continue the up move, or we would trade in this range bound kind of scenario. Since there is a wide range, so if it closes towards that 24,800 odd levels, then the retail traders would see a risk or loss. However, if it trades in the narrow range between 24,400 to 24,600, then in this range the retailers might gain. So let's see in today's trading session what we are headed towards once we close. So on the cash market side, DIIs have been quite bullish. The overall sell-off had happened. However, in this sell-off, the DIIs emerged as the buyers in the cash market, and they have purchased to the tune of 4,274 crores, which is quite a significant position, and is quite bullish. However, on the FII's front, they have been the sellers for with the tune of 4,770 477 crore, which is not that significant selling. But yes, when either of the players pitch in, then we could see some strength that could emerge, and there are very low probabilities for us to slide down. Okay, so significant slide down. So we could hold that strength in the markets at the lower levels, and that is how the DIIs could pump in immediately whenever we see maybe the major indices approaching the downtrend. So overall, the market is not very negative. So today's trading session would be the decider as to where the market would be headed for the coming week. So it's going to be crucial for the traders to analyze the underlying reasons for the sell-off, and was it a pure profit booking after the strong run, or there are certain specific domestic or global concerns at play, is what we have to look up. And since yesterday there was a positive data on the wholesale inflation, that could be one of the play for us for today, for further future direction in the market. So it is expected that we would open a slight gap up and then sustain that gap up and continue showing some strength. If that strength is taken down, then we could see a significant sell-off that is expected to further come in today's trading session. So that's it from our side in terms of the overall market insights. Put in the comments what do you expect from us, or do you need any help in terms of identifying the ranges or proper analysis, not just on the indices but also on stocks. We would surely put it in the comments with our analysis for that. So if you found this video informative, please like it and subscribe to our channel for similar such daily market updates, and hit the notification bell to stay informed. So until then, trade cautiously, and we will